Can you hear me now? I've been I've been talking for some time. Um, okay, I think I know why my microphone was not on the software. Apologize. Can you hear me now? All right, quick one. This pair, Euro Pound. I'm looking at this 1 hour auto block and gap in here. We have this whole move down. Yesterday, I mentioned that we had an auto block here, and if they're able to go above it, then it can act as a continuation, and they happen to leave this gap here. So when price was leaving, right, there was a gap in here that said watch it, but if they go through it, then it's a buy. So they're coming back down again, so that's where you want to watch. All right, even though we have this here, and that is roughly just above 50%, so I don't like that. It's just below 50%, so I don't like that. It can go up from here, but I don't like that one. I like this one here. Okay, so that's a quick one. The euro trades that I shared, right, yesterday, paper trading, this one, it missed the target by a few pips, right, and we are coming back down. This morning I woke up and this is what I saw. I was not quick on the screen. Since I moved here, I need to get into the mood of waking up early, because I'm trying to relax or rest as much as I can, and then I'll go back waking up early. But if I had, woke up early, this was a nice trade in here. Price trading back into the order block at exactly that 7:30 time. You drop down to the 15 minutes, you can see that 7:30 time, that's when it was traded into that order block. And what I saw was initially the dollar index taking out previous equal low in here, okay, and then price rejected. And on the, I think on the 15 minutes, yes, here, let me drop down to the 5 so you see it properly. On the 5 minutes, it broke market structure here, which is something that I've been recently introducing you guys into, trying to identify the trend on every time frame. So the 5 minutes broke market structure, right? So if 5 minutes breaks market structure, it's going to trade within the 15 and the 1 hour and find an imbalance. So on the 1 hour, this is the imbalance that I saw in here. And if you drop down to the 15, you'll see that we had another imbalance in here. All right, so when I saw this swing low, as soon as I saw that swing low, I said to myself, it's gonna trade to that. That's why I immediately sent out this on the 5 minutes chart, right? Because I was late to the chart, so I couldn't see it in time. And if you go into the 1 hour, you see that it's within that 1 hour order block there, and basically they send it down to attack this equal lows. That's what I was looking at the time, because I couldn't do a full analysis on how far it's going to drop. I only saw this equal lows in here, and then I sent that, selling short that imbalance, stop loss above the high, and then targeting this low. Obviously it's going lower because I think today being Thursday, they might send it back down again. and they might probably send it into this gap here. All right, but that's all depending on how price is going to trade above this high, because this is a 1 hour high. If we break this 1 hour high, then we have to switch to the H4 and then look up here for price to trade there. So if price is going to trade in here, then euro is going to also trade a little bit lower down here, and then maybe even into this imbalance in here. All right, so we have 16 minutes to go. If they do close above this high, that is a confirmation of a move to the upside. So any pullback into the gaps that was left down here, I think I like this one here and that one, right? Any pullback into that will send price back up again. So if you see that, then we'll be looking for prices to go into the 4 hour imbalance, which was here, right? And then we have that one there as well. Is there mitigation block on the weekly? No, I did not use a mitigation. I just used the previous week lows here. All right, it's just the previous week's lows that I used. So a run on previous week low and then a rejection. That's all. That's the logic behind it. Okay. And then on British pound, this one is something else. It's on a mine on its own, but I did not trade this one, or I did not even look at this because it doesn't make sense to me right now. Yesterday I was anticipating the close above this high, but that didn't happen. So price has rejected and is coming back down. This is why, you know, I kept mentioning that you want to stay away from trading anything majors until after Friday, because this is what they can do, right? And it makes it very hard to kind of trade it, because if it's going up and you miss it and it retraces and you try to buy it, then it goes against you. All right, so that's why I said stay away and wait till after Friday. I still stand with that in terms of this one here, even on all the majors. Just paper trade, okay, and then wait till after Friday, and then you go in. New Zealand, I think it's coming back for pullback, but if dollar goes higher, they might run this equal low. Okay, right now it looks like it might trade into somewhere here, and on the 1 hour somewhere down here. Okay, that's where I think it's gonna trade to. This gap here, it was valid before we take out this equal high, as I mentioned the other day. If they take it out and it's coming back down, it's not good. So hence it just ran through it like it didn't exist. So let me get rid of that. So anticipate it going all the way down in here. Let me see. They've already traded that during the night period. That was the last move up, and then they break it here. Yeah, they've kind of traded it before going down. If it went through with one candle, then I would have looked for price to come back and continue going down, but they didn't. They just stab it several times before going down, so leave that alone. If you're short, then look here, right? Aussie, I still like that gap down there, maybe for next week, or NFP, they might send it down. I like the equal high that they've left up there, this equal high and that high. I like that. If we trade into this gap or even down here, which is possible because the range starts from this low to the high, if they trade down here, I'll still be looking for buy to continue going up. So whatever happens, we are going to be looking for buys, but wait till after NFP. Let's see how far they retrace. If they send it down here and we start seeing rejection, we're looking at this high and that high for a continuation to the upside. So pretty much nothing has changed from the analysis that I've done since yesterday. Nothing really has changed. The only thing that is probably occurring now is this pair here retracing, and it looks like it's rejecting this, but again, I like that one. All right, and my stop loss is here. I placed a demo trade because I like it, okay, not because I want to take a trade, and I wouldn't even take a live trade. So I put it there because I like it. I want to see how it will behave. All right, so you can do the same thing, and let's see how that gap will behave. Oil, yesterday I talked about this high, right, and that small order block there, that they can run that and still be valid to go lower, right? So I decided to move my stop loss away from it. And now let's do a bit of let me give you a bit of experience on that one. Why did I think that price was going to do something like that? First of all, we had this big drop, okay, this big drop here. That is a sign of weakness, okay? It's a sign of weakness. Therefore, price is going to continue going lower. Anything coming back up is what? It's just the pullback. So how far can they pull back? That's the problem, right? That most of the time you are going to face, okay? So on the lower time frame, what I did was looking at this order block here as where they should stop, and then above it, what is the level that they can trade to. So on the lower time frame, there was that 15 minutes 5 minute order block in here, and then if you go all the way to the left, all right, if you go all the way to the left, I think is the last up candle on the daily, this one, right? So that's the last up candle on the daily, and then you have the last down candle also here. So from here all the way up is what? Buy, and then they break it down here. So if I draw a line right there, now I don't expect you to, maybe you might know it, maybe you might not. That level there, okay, is the beginning of the order block. So on the lower time frame, it acts as the resistance. So the last down candle going all the way up and then break, that is the breaker, right? And then price hits that and then drop. So it's similar to I think there was an example on this pair here. Let me remove all the drawing and show you here, right? This is the last down candle. If I go into the 1 hour, you will see, and then price goes all the way up, and then they break it right there, okay, and then price retraces back to it and then drops down, okay. So right here, That's the last. Let me drop down to the one so you see it properly. That day was the 25th. So dropping down 25th starts from here, right there. Right, so this whole move to the upside down, that level is a breaker, or the beginning of the order block. So they break it and then retest it here, and then price goes lower. All right, if you study this, I think some people call it balanced price range, others call it breaker. It does not matter what name you want to give it, or support and resistance. You want to see price make a run up, and then we want to see price break it with one candle, as I most of the time say. Once it breaks it down, okay, that whole move to the upside becomes an auto block and retest continuation. Right, and I think the last time I showed you how I use it to get into a trade if I miss an entry on the higher time frame. You just drop down to the lower time frame and then basically keep selling any small pullback into the rally. So something like this, I think it was on the 1 minute chart. Okay, so something like this, as you've missed the entry, every time price goes up and then it trades down, okay, you want to highlight the last down candle prior to the move up, and then you want to sell as price trades to that. So here price goes all the way up and then it breaks it, the last down candle, you want to sell the pullback to that. So same thing here, preferably you want to see one candle break it. Okay, preferably you want to see one candle break it, like this one here, and then you want to sell that pullback into it. So same thing here, you want to sell when price pulls back into it as it's dropping, because you've missed the actual move. So this one here, as it went up, if it starts to break down, that would be a nice level to anticipate a sell at. Okay, so that's the logic behind why I felt like this was gonna reject and go lower, right? Break, retest, and then move down. All right, you can use it in the buy scenario as well. If price is going up, price is gonna drop, rally, it breaks it, and then retracement into that, you buy it, okay, in an uptrend. Okay, so that's oil, and I think it's gonna continue going lower to that equal low. This was just a pullback, so we should see oil go back and attack this low for now, and then I'll look at this equal low. Gold, I think yesterday I gave you a gap on the 15 minutes, two of them, one being here, sorry, it was I think on the 5, yeah, one being here and one being here. Again, I woke up too late, so I could have got this one here. Could have got that one there, but I woke up too late. There were, I think, a couple of gaps on the downside, but I was too lazy to find that one. But the logic is still the same. You just have to go in and find the imbalances, right? And then that's what happened. So as soon as I woke up and I saw it, I thought to myself, I've been waiting for this since Monday, right? Because the seasonal tendency was saying we are going to go up, or we are going to form a low by the 1st of April. So I've been waiting for this for some time, and I'm not going to miss it, not even on the demo account. So I decided to buy it, leave my stop loss below this low, and then let it run. So that's why I got in on gold, because I've been anticipating that for some time. So we should see gold trade up into this gap here, and then maybe they go high as well, right? So I expect gold to continue going up. Dollar CAD is pulling back again. This is why I hate trading dollar CAD. It looks like it's confirming a swing low after taking out this low. So I don't believe this is gonna go higher. It might be a retracement, maybe back to this low here, back to this low here, because that's the last bullish move, and then they break down. Let me show you an example of what I was sharing earlier. Right, this is the last move to the upside. They break it down here, and then price trades back into it, and then it moves down. All right. So maybe they might come back and have a stab at this one. Now, I was looking at this earlier. Today, this morning, and I was trying to figure out why did it come back down. Okay, let's remove the joint, because sometimes when you do take a loss, okay, or when something that you've been what you're expecting does not play out, try and figure out why. All right, so I was trying to figure out, because I was looking at this one, even though it did not close above it, I still looked at it as a breaking structure on the H4, because on the 1 hour I did close above that high. So I was trying to think, why did it not go higher from this order block here, right? Why did it not go higher from that order block there? Yeah, that was the question I was asking myself. Then I went on to the daily, okay, and then I saw that even though you cannot see it, but there is a swing high in here, okay, which in my opinion is significant, because if this is a swing high, then this move here is a retracement. All right, so notice we have this high, higher high, and a lower high. So that's the swing high. So then I placed a line there. And then I went on to the weekly time frame, and then guess what? That was a weekly high. So if that's a weekly high, then it makes sense that the move up was a retracement, because that's basically the normal movement of price when we start the week. It's going to open, it's going to retrace, and it's going to expand to the downside. So if you drop down to the H4, okay, this is a previous week high, and this was previous week's low. So if you do the fib from this high to that low, it retraces to exactly that same levels that I teach you to look at. optimal trade entry zone, and then look for continuation to the downside. So what price did there logically was right, but I did not see it because I did not go and do all that high time frame analysis, looking at the weekly, looking at the daily. So it's me, okay, not the price. Price did exactly what price was supposed to do. It was me that didn't do the necessary analysis to understand that, this was a very high probability area to basically look for a sell. So then I went in and then I checked this order block here. All right, and then let me cut it off and then show you the power behind these imbalances inside the order block right there. And then the ones that I teach you to, the ones that I tell you that I like, is the ones that have what? A short-term high or a short-term low above or below it in the right context, like this. I know this is hindsight, but it's good to study so that next time, drop down to the 15, go one more up there, and to the 5. Okay, drop into the 5, everything gets diluted. So I'm gonna keep going. 4. There's nothing. 3. There's nothing. I'll go to 2. Okay, on the 2 we have something really small in here, right there. I'm just gonna go to the 1. Okay, on the 1 we have this one here, and then I'll go back to the 2. And then use this one. So I like these 2 here. I like that one and then this one, based on dropping all the way to the lower time frame. So if you go to the higher time frame, there's one inside the H4, the H1 imbalance in here, and then inside the order block there's one there, but they are all both within this 4-hour order block, right? So if I drop down to the 15 and then I play it, look how beautiful that entry is. So this is last week. I think last week we actually talked about this one because that was a pullback and then a sell. So that's where price went and then gave up the ghost inside that H4 order block. I think there was another gap somewhere. Not there, didn't quite get there. So that level will still be a draw on liquidity. If they get there, something might happen as well. So maybe from here we could see price trade up there. Okay, so that's how I steady back. Why? Which trade? What was the trade again? Has it finished? No, it hasn't finished. Okay, that was how this move here that I was expecting to go higher. That's why it didn't do that. It needed to come and attack this low. Okay, the algorithm needed to send price below this low first before coming back up again, because the weekly range started from last week here and then ended there. So when we started this new week, all this was just a pullback, and then they send it back below that low. So that's where we're currently at. So we could see it go higher, probably up to that gap there. We've left a swing low in here. I like this gap up here. Currently the 1 hour is bullish. Right, the 1 hour has changed direction, so we could see it trade up into that gap there. So any 15 minutes retracement, that's a buy. They've left some imbalance right there. I like that one. And this one. So these two imbalances will be a good level for a buy to continue going up into that 1 hour. But just paper trade it, because it's not something that is based on seasonality. So I'll paper trade this. Alright, so New York session, we'll see how this one will behave. Bitcoin, yesterday I think I said that if it's good, you should move from here and go higher and take partial there. Nicely done. And then it came back down again. So I think this pair has officially moved into some form of a consolidation. I'm looking on the H4. Based on the H4, I think this is just too much of a sideways market to be playing with. It's too much of a sideways market to be playing with. But I'm still bullish, looking for 48,579. Right, 48,579, this high. I'm still bullish up till there. So I want to see price take out this high. It could be just accumulating and then one more run up there. Alright, so look for buys only. On Ethereum, that's been a long that I've been in for some time. I think since Tuesday, I got triggered in, and since then it's done absolutely nothing, just back and forth, back and forth. I think I like this H4. Okay, they've already traded into it. This H4 swing low that was formed in here, right there. Let's look into that. So drop down, already a gap here. If we investigate it, I like this. I like two of them. This one, this one, and that one. I'll tell you what I'm gonna do next month, which is from 1st April is tomorrow, so from next week. What I'm going to do from next week. So I like these two gaps on the 5 minutes chart, especially this one here, because we have this short-term low there. Let me see if I can go into the 5, 4, 3. Okay, they're still there, so that's very powerful. When you go through the time frames and the gap still remains, that's powerful. 2 is still there, and then 1 is still there, right? So this one is very powerful, and this one has disappeared, giving us quite a lot of them. So I'll frame it off from there, 2 minutes, and then leave the other one there, right? So if I measure it, okay, that one is just about 50%. So like I always say, use the one below 50%. So we're going to place a buy limit here. Or I can be very, if you want to be aggressive and have more risk to reward, and you trust that there's no gaps, because you have to do that work. You have to go through all the time frames, if you have seconds as well, to make sure that there's no gap down here, because if there is, you will get stopped out and still be valid. So I don't have the luxury to do that. I'll just leave it here, and then I'll hit play. There you go. It's a nice entry, sniper entry, back to this high. That's 321, and then that's it. Right now, I think I've gone through all of that. Go and check Euro again. It missed. I think it missed it by a couple of pips. I didn't quite trade to that low, but that would have been a nice area to sell short. So the next good area is once we break below this low, then you sell short again once we retrace back to it. What I intend doing going into April, all right, is, now it requires you to think a little bit, but it's doable. What I want you to think about is, this is something I'm going to do, and I'm just sharing it with you. Every week, okay, think about it that the market is starting all over again. Okay, think about it that the market is starting all over again. So everything is fresh for that week. Anything that happened the previous week, yes, you can consider it, but pay more attention to what's happening that particular week that you're trading in. So in my back testing, I've realized that on the H4, it's very it's a very strong time frame to use. All right, so the very thing I just did on Ethereum, you can have that, just that, as a strategy that you can trade on a weekly basis. So during the week, you're not interested in anything that price is doing. You want to see a swing form during the week, okay, and then you trade it during that same week. So let's say we start Monday, and then on Monday we have a swing high formed on maybe euro, okay. Because it's a fresh week and you're not looking at anything else for in terms of price action, you're just focusing on this particular thing here, all you have to do is highlight the order block, find the gap, and then trade that for that pair that week, that strategy. That's it. You're not going to be looking at, okay, where is it trying to reach for? None of that. The idea is you want to get a sniper entry inside the order block to trade it back outside. So it's going to have a pullback and it's going to move back out again. All right. So in that pullback, like this, let's go back to this one. Okay, like this one here, this swing high, okay, it happened today. Okay, the fact that it happened today, all you're looking for is price to trade back to it and then attack the retracement low. So the retracement low will be this one. So let me bring it back all the way here and chop this thing off. Okay, so all you'll be looking for is for price to trade into the order block and find a sniper entry like this and then trade back outside. That's it. Okay, that's the whole strategy. There's nothing else you want to do. Okay, that is something I am going to use and I'm sharing with you. It's something I'm going to use to trade my next I'm going to have a few funded accounts open because the last one that I had, I think back in January, I was so super stressed. So I ended up doing something that I was not supposed to do. I was rushing it. I wanted to get some money for the house decorating and stuff like that. So I took too much risk on one trade and it ended up going against me. So obviously, because it's a funded account, if you violate the rule, they take it back, right? So that's an account that I've been trading for some time now. I've had it since 2020. I've had it since 2020. So I passed it in May, and then I started trading the live in June. So I've had it since 2020 June, right? And it's just last January that I violated a rule because I was, looking for some money. So I am going to trade another one, or maybe two, because I like to be focused, right? And I'm sharing with you what I'm going to use to trade it. Okay, all that I'll be looking for is on the H4, not the H1. You can do the H1 if you want to. On the H4 during the week, like this one here, it happened on Monday, right? Monday was 28th. Okay, so Monday 28th, we had this auto block here. Okay, so all I have to do is drop down to the lower time frame drop down to the lower time frame. I know this one is London, so drop down to the lower time frame, find the imbalance, which is this one and that one, this one, and that one there. And if I keep dropping, I'll probably get it properly. And two, this one, there's two of them. I'm gonna just combine that. I'm liking this one as well because of that short-term low. Let's go to the one. Okay, I like this one too. So there's two levels that I like, and they are both below the 50%. So I'm gonna buy here with a 0.25 risk, and I'm gonna buy here with a 0.25 risk, and both of them will have a stop loss of the same low. Let me see if it's equal. No, they did actually run it, so it's not equal low, so I'm fine with that. Both are gonna have the same stop loss. So on the first one, I might get a smaller lot size. On the second, if I get triggered on the second one, I'll get a bigger lot size right there. And the aim of the trade is to trade it back above the order block, the high of the movement that takes price into the retracement. So if this is the retracement, then this is all I'm looking for. I'm not interested in anything else. All right, I'm not interested in what is up here. I'm interested in just that for the trade. So I got triggered on the first one, triggered on the second one, and then I'll be expecting price to take out this high as my TP. Obviously partials, you have to take partials. So when it comes to partials, I will leave you to decide how you want to go with the partials. So that's it. I got this one and that one. Monday, this is Monday. By end of Monday, I'm done. Okay, so whatever results you get, that's it for this trade, and then you move on trying to find the same kind of pattern, and then you trade it during that same week. Nothing beyond the week. Okay, the order block has to be formed within the week, and you're looking to trade it within the week. All right, so another example would be maybe the British pound, the sell that happened on, when was it, Tuesday. This order block here happened to form this week, 28th, right? So here, no, you don't need the directional bias. All you're interested in is the order block itself. Okay, notice that I'm only looking for price to trade back outside the order block, the order blocks, the retracement or the candle that leads price into the retracement. So if this is the candle, where is it? Like for example here, if this is the candle that leads price into that retracement, then I'm looking to target that low. Okay, this one, that was last week. If this is the candle that leads price to the retracement, I'm looking to target this high. Okay, you're not looking beyond, because when you start looking beyond, that's when you have to know that's where you need to know the bias. But this is not, you're not looking at bias, you're just looking to trade the order block itself. Okay, so this last Tuesday, I actually gave you all the imbalances on here. Right, and we went down, and then we find this one and 4, that one there, 3, yeah, that one there. There's a small one in here as well. Like this one. If it stays there, I'll enter on that one because of that short-term high. Let's go to the 2. It's a small, okay, they trade back into it. I would say I would love that one too because of that short-term high. That one there. That looks nice. And yeah, there's 3 of them. There's 3 of them. So I'll enter like this, like that. My stop loss, I like to place it up here because you can place it here, but like I said, if you don't have the luxury to know if there's an imbalance up in here, then just leave it above the high. All right, and one more entry here. So my risk being 0.50 because we're in April now, or we are going into April. Now on this trade, okay, I wouldn't have expected it to go all the way down because it created another order block before coming up on the same time frame on the H4. So I think Friday I said, not Friday, Tuesday, I said you can take both of them and one of them is gonna do what? One of them is gonna give way. So you get stopped out on one and one is gonna go your way. And it did exactly that, obviously, because that order block was strong. So let's go back to the higher time frame and then play it. So all 3 go on entry. Pause. Let's see. That was the first one. That was the second one. And the third one, let's see if we go on entry. It didn't touch it didn't touch it. If you zoom in, that would have been a, yeah, that would have been something that you cry about. That's something I will cry about. But 2 entries, so if you divide your risk into 3.50 divided by 3, you get 48 0.18. Let me do the maths. So 0.50 divided by 3.16. So 0.16 as the risk, and then targeting the level that I gave was to target this high. Alright, that was the level that I gave to target. So if I squeeze this one here and then squeeze this one there and get rid of this because that didn't get triggered. So these are the two trades that you would have got. 1.6 and the other one pays you 2.5. All right, and then on the H4, because there is an order block here, you do the same thing, right? So we go into the H4, we do the same thing here. Now, granted, there was a bearish order block here that I personally traded and it stopped me out. So don't think that all of them is gonna go your way. Okay, you will get sometimes stopped out. So by doing that same thing on this time frame, there's a gap in here. So this is the whole shaded area as the order block, so it goes all the way down here. Right, it goes all the way down there. So I'm gonna get rid of the box and then identify all the gaps. So we have one here, which is the one I said you want to place your buy at. So if you drop down, it's a huge one. And then there is one here, which I like because we have a short-term low. If we go 3, so that big one can be reduced to that, and this one can also be reduced to that, and 2, same thing, and then 1, 1 has a small one in here with that big one, but I like this one. This whole area here is the gap. You can break it down into 2, but I'll just combine them. All right, and the time was London, so it looks very nice. This was also during New York, so that was also nice. So what I'll do, 0.5, I'll divide it into 2, and I'll enter long here with a stop below that. And now, because the movement started from up here to come down, I'll be expecting price to go and attack this high. And then on the second one, I know I've gone over my time, but let me finish and then I'll call it a day. I'm showing you something that I'm going to do from next week, Monday. It doesn't mean that's the only trades I'm going to take. Okay, don't get me wrong. But this is what I'm going to use for funded account, because I want to get it done and day trade it or short-term trade it, nothing beyond 1 week, because the one that I use, or the company that I use, they do, or they don't allow you to trade beyond a week. So this will be the 2 entries, one offering you 7 to 1, one offering you 2. Hang on, right there. Let's go to the 5. There you go, right? And then that's it. So you got a trade here to come down, a trade here to go up. You've done this on this pair, you've done that on the euro. That's more than enough to get you to where you want to get to. Okay, you don't have to trade every single thing out there. Your job is to make money, and you did. All right. So I've just given you something very powerful to go and trade on a daily basis, on a weekly basis, and that's essentially what I am going to use for my next funded account that I'm going to start literally from Monday. All right. So any question, let me know, and then we call it a day. Obviously I'll share the same thing with the afternoon people, because some people might not make it this morning, so then the afternoon people can also hear about it, so they know what IT is doing for the month of April. Now, something that you can also do is have a checklist. Have an Excel sheet with OB, H4 OB, OTE, and I don't know what you trade, stop rates, who you do that with current. I don't understand that question. Rate, and then this one would be long term. So OB strategy for funded account, OTE for personal, and whatever, rate for whatever, long term for savings. Okay, have something like that, and then anytime one of the strategies gives you a signal, you know which account you're going to trade it on. So if you have a strategy on the daily, like I showed you, then that's going to go on as your savings account trading. If it's a rate, then rate will be for something else, OT will be for something else, and then OB for something else. The strategy you just shared for funded account, would you take a trade or do you with that H4OB? Yes. This one here, yes, and it would have been a stopped out. This one here. Let me look at the time. I will reconsider this because of the time, right? And I want to see the auto block create London like this one here, London like this one here. So I'll consider this, but I probably wouldn't trade it because I want London or New York auto blocks, not Asia. Because one of the things that our master said that time of the day is very important, so I'll consider that,
but probably not traded. So you can look into it as well, right? The auto blocks that works. If you backtest, you will see what I mean. Sometimes they work, sometimes they don't. So I'll leave you to look into it. Straight away, I knew why it failed because it's Asia. So if it fails, then I know it's Asia. So you can think about it this way. That's basically Asian range, and Asian range, they like to take out the high or the low. Right, perfect. Okay, so that's it from me. I'll see you in the New York session, but New York session is going to be roughly the same as what we've just done. I'm gonna spend most of the time explaining this and also giving them the same advice. So if you want to come, that's fine. If you don't, it's also fine because you're not gonna hear anything new. It'll be the same thing. So let me leave you and go. Oh man, look at that. If they don't give me an entry, I am going to be angry. If I don't get an entry, I will be mad. Okay, market structure hasn't broken yet, so they might probably come back down. They might stop one more time down. All right, enjoy your morning. I'll see you in the afternoon.